Hey everybody, this is Jose Blasco here. We are about to start, less than a minute. Let's have a quick sound check before we get started. That would be great. A quick message on the chat box would do. Just a quick hello. That's nice for everyone, isn't it? At the same time, it gives me the indication that you hear me well. So sound is good and we are ready to get started on time, which is the plan. So we got 30 seconds to go. Please go ahead and share a quick hello on the chat box, so we can start on time. Wonderful. Siderman, how are you? Ahmed, good to see you. Maka, very good everybody. Very good everyone. We got 10 seconds to go and we are ready to begin, guys. Almost there. Oh, and I almost forgot to turn on the video stream. Let's put myself here on the bottom right side of the corner so I can say hello. And here we go. This coincides with our time to hit 0. So my friends, we are live. Welcome to the session. Today is June 30, 2021. This is options with options. The plan is to trade options. I guess it's pretty self-explanatory. The beauty of options is that, as the name of the session suggests, options give you options, right? So we love to look at the markets from different angles, up moves, down moves, sideways markets, high implied volatility situations, low implied volatility situations, all sorts of different possibilities. And with option strategies, we can adapt to that and position ourselves smartly in the financial markets, okay? Before we get started, I would like to highlight the disclaimer on the upper left side of the screen. Please go ahead and read it carefully. This is important information. I am counting on you guys to read it all. It's relatively short, so it's not too much of a demand. I would say read it carefully, guys, because again, trading involves risk. And again, some of you watching this session today may be very experienced, but some of you may be less experienced. So it's important that you are aware of the risk attached to trading, okay? Let's talk about the session for today. So we just said hello, isn't it? Thank you again, Christian. I didn't say anything to you. How are you, my friend? How are you, everyone? Very good, everybody. So the next step is to remind you that we are simulcasting. That means that we are streaming live in multiple places at the same time. We are on YouTube, we are on LinkedIn, we are on Facebook, we are in our private room in tradewithufos.com/live. We are in those all of different locations. And therefore, depending on where you are at in the world and which platform you use, you should expect some video lags. And therefore, it's always good that you compare. If you are trading, if you have a trading platform open while you are watching the session, it's always important that you compare the real-time data you see on your screen and my screen, because it may be 10 seconds different, it may be 15 seconds different. Again, it depends. Okay, so just keep that video lag in mind, which is the normal, consequence of the worldwide video distribution networks. Another thing about the streams, which is important for you to understand, is that in our private room, in our website, tradewithufos.com/live, we run the sessions full duration. I like to think of our private room like a place where, the traders that, you are like me, that you love it, you never got enough, you always want more. And you have time. So then you join us there and you spend the whole session with us. I like to think of places like YouTube, LinkedIn, Facebook as public places where you don't need to register or subscribe, and you can attend our sessions. And the content is actually exactly the same that you would get in the private room. The only difference is that the duration is going to be a bit shorter, and therefore it's ideal for those traders who are looking at trading more as a part-time thing. Still serious, okay? This is obviously a serious business, but at the same time, more part-time if you wish, and less, kind of like a very strong passion or more full-time, okay? So that way you understand. So summary, if you are looking at trading kind of like, part-time, so attend the sessions in YouTube, in LinkedIn, Facebook, and that should be good enough. If you are looking at trading like you want more, so then our private room in our website, it's the place where to be, which obviously implies a subscription. The plan for today will be to look at the market, understand what's happening in the marketplace, then look at trades that we already have in the account, and from there move into planning and executing new trades. Okay, so that's the plan for today. And with no more further ado, so I'm just now moving to the charts so we can talk about what's happening in the market. Joanne, how are you? It's good to see you. Real pleasure to see you there. Always very happy to see your name popping up. So thank you for joining us. Anyway, so let's begin. The beginning part of the session is to analyze the markets. What you can see on your screens right now is the S&P 500. Okay, so we have the S&P 500 in front of us. The first thing that we need to understand about the market is, what's likely going to happen to this market based on the direction in which it's moving. Is it going to continue? Is it going to reverse? Is it going to move very far? Very not so far. So we start our analysis by looking at auto climate, isn't it? If I zoom in auto climate, so we can see that currently the market is showing a blue and thick dot. Blue and thick means the climate is confirmed to the upside, so we are expecting the market to continue going higher, but now, of course, nothing goes higher to the infinite. So how much higher we expect the market to go, and this is where those figures on the top, okay, 893, let's call it 9, and 6 come into place. So 9 means that based on probabilities, in this time frame, this particular market, the S&P, statistics suggest that in this particular market condition, this condition tends to last in a normal case for 9 candles. This is candle number 6. In other words, we've been moving to the upside for 6 days, okay, and statistics suggest it's going to last until 9. Okay, so we should expect the market to continue moving higher. This is what probabilities suggest. Okay, we are just reading data, guys. No opinions, but this is crazy. Maybe it's true. It doesn't matter. Okay, if the market is going to do what it has to do. So we are just looking at the markets from a purely statistical point of view. Statistics suggest it's going to continue going higher for another 3 more days. Sometimes statistics are met, sometimes they're not, and that has a lot to do with the UFOs that we have on the screen. So if you had that particular statistics 6 out of 9, but we didn't have any supporting UFO on the chart, UFO stands for unfilled orders to buy, isn't it? So what would happen is that probably the market would have an easy time falling. Why? Because there is nothing to stop it falling. But in this case, we have a UFO here. So if the market tries to fall, typically that UFO would push it back up and it would continue going up higher and probably meet what statistics suggest, which is 9 daily candles moving higher. Okay, so far, all good for the market to continue demonstrating how strong it is and making all-time high for a little longer, and that's what we have. Okay, now of course anytime markets can change in an instant. Okay, so always keeping the risk in mind, always having contingency measures in place, stop losses, and all sort of techniques on how to manage risk are always used. And if the market was to start falling very hard, we start seeing red UFOs instead of green. The climate changes, so of course we're not going to now expect it's going to the moon. We have to always rely on those stats. This is what we have from a market direction point of view. And looking at the S&P 500, it kind of represents almost everything out there. Okay. From an implied volatility point of view, so we are now looking at the VIX, which represents the implied volatility of the 500 options, or I should say the options that represent 500 stocks that represent the S&P 500 index. So what's happening? Well, currently the implied volatility values are 15.98, let's call it 16. And we got red UFOs all over the place and no green UFOs, meaning that volatility is more likely going to fall than going higher. From a climate point of view, you can see the climate is not confirmed, but by the way, this is a pretty normal thing. In the case of the VIX, we have a lot of those dots which are unconfirmed, because again, the VIX is not really a market that tends to pick up direction. It's a market that normally goes up and down given the nature of human emotions attached to trading options, where options become expensive, they become cheaper, they become expensive, they become cheaper, sometimes more expensive, but then cheaper. And you can see you got those zigzags. It's kind of a ranging market with a little bit of a bias to the downside, especially if the S&P goes up. Okay, that's what we normally have. So we are in a situation where selling premium is going to be probably the best choice, because options are likely going to become cheaper. Okay. By the way, if you look at what we have on our portfolio based on prior trades, okay, and here is Thinkorswim. So if I show you what we have in the portfolio, we have 4 trades running at this moment in time. We have PayPal which is a double calendar, even though we are missing one leg. It's not a bad thing that we are missing one leg, it's just a fact. We'll come back to this in a minute. We got Lily, which is a directional trade that it's making money to the upside as the market goes up. We got Goldman Sachs, which is a non-directional trade. It's an iron condor. It's making $4.50 at the moment. It's quite flat. And then we got AMD, which is also a double calendar, meaning that we have two trades that are double calendars. We have one trade which is directional, and we only have one trade which is an iron condor, which is a credit trade. In other words, almost everything we got in the portfolio is positive vega. The only thing that is negative vega is Goldman Sachs. And everything else is positive vega. So from an options trader point of view, I would like to neutralize the vega risk of the portfolio. And the first thing I'm going to do when looking for trades today is look for another iron condor, hopefully to join Goldman Sachs in the account. Okay, this is what I plan to do in a minute. Okay, but before that, we need to review the trades that we have currently, so we know what happened. I'll start with Starbucks, okay, because this is a trade that is over. So maybe it's a good place where to start. Last day we met was last Thursday, isn't it? And the last Thursday when we met, so we basically, the market was trading here. That was Thursday, okay? And this was an iron condor that we have an expiration date of June 25. So that would be the moment in time where those options would then expire and the trade would conclude for either a profit or a loss, depending on where the stock was going to be. We were shooting for the stock to remain in the purple area, and it did. The stock closed at that price point, which is within the purple area. So that was a full profit trade with Starbucks, okay? And I believe a bunch of you were working on it, and therefore it was a good one to have, okay? So I'm gonna delete that one because that one is over, okay? MDT, okay? This is a trade that I have on the screen, but you may have noticed that I don't have it in the account. And if you recall, if you were with us in the session last Thursday, you probably remember that I tried to get filled, but I didn't get filled. I didn't get enough premium. I can see Siderman that you got filled on Friday. Okay, so great. Remember that we talked about the trade with Medtronic as a trade that was going to be good for practice purpose. Okay, because the amount of premium built in that trade was not that amazing, but for practice purpose it was meeting the rules. So why not, when in learning stages, execute one of those and practice with it, because it had a relatively low risk. If I'm not mistaken, it was $85. So that was the worst case for that trade per contract. Okay, so well done, Siderman, with executing this trade. I was not filled, but I will pretend I was, so we can then monitor this trade and see what happens. So as you can see, the trade was taken on 6/24 with expiration date July 16. Okay, and basically same story. It's an iron condor, so we were expecting, or we need the stock to remain in the purple area to profit. Okay, and that was the area that we selected with our UFOs above and below, etc., etc. Okay, so now let me load Option Station Pro so we get a bit of options data here. It's loading, so just give me 1 second, guys. It's gonna be there right in 1 second. Here we go, loading now. So we have a Option Station Pro here, and by the way, I got MDT here, perfect. So that's the symbol I was looking for. So it is loading, and I did set 15. Okay, when I did it on Friday, I didn't get filled in the account, but I did set it here so we can then simulate the trade and see what's going on. Well, if you got into this trade on Friday, this trade is currently paying $6. You have 48 cents of theta kicking in every day. So again, 15 cents was very small premium. That's why I said for practice purposes is good. Beyond that, not that exciting, isn't it? But anyway, the trade is doing its thing. And from a trade management point of view, what you care about now is the one standard deviation above and below, which is 129 to 119. If I was to plot those values on the chart, so 129 is about here, something like that, and 119 is more or less here, something like that. So in other words, we are still within the range. The dotted line haven't surpassed the horizontal lines, the solid lines, and therefore statistics still suggest we're going to stay in the range, but most importantly, we got plenty of UFOs above and below to create bounces up and down within the range, okay, helping for a price to stay in the range. This is not always going to be the case, but in most of the cases, as we see, it works quite well. So we are happy and comfortable with Medtronic, and there is nothing to be done at this moment in time. This one is an easy one. So moving to the next one, Joe, people, you never got filled and you canceled the order. Same happened to me. And again, that was a trade that was good for practice purposes. So I guess that it's okay if you didn't get filled. We'll find another trade today. Okay, so it's all good. So Goldman Sachs, okay, that was the other companion. This is also a trade. This one may need some maintenance, by the way. Okay, but this is also a trade where we put together an iron condor. 6/24 was the date when we entered. 7/09. July 9 is the expiration date. So we need that stock to remain in the purple area. And if you think about it, so what happens is that we enter the trade at that price point, and that Goldman Sachs trade now it's a bit higher, right? So it was under 370 and now it's about like 375 kind of. So what was going on, right? Well, initially you would expect a little bit of a loss in the account. It actually shows $7 of profit right now. Why is that? Well, that's the beauty of time decay. Okay, let me compress all those trades and only highlight Goldman Sachs so we don't get confused. So $7.5 is what we see in the account as a P&L right now. So why is that? It's the beauty of time decay. That's great. But it doesn't mean we're going to fall now into being over-relaxed and do nothing about it. Okay, we always need to go and check on those probabilities, which for Goldman Sachs now it suggests 361 and 388. Okay, so let's put those values on the chart and see what happens. So 361 is somewhere here. Okay, and the other one is 388. 388 is more or less here. So to be honest, I thought the upper line would be beyond the solid line, but it seems that it's not. Let me do this right. 388.58, yeah, correct. 388.58 is below 389.93. So we are okay based on probabilities. That stock is likely going to stay within the dotted lines. And we got a collection of UFOs below. We got a collection of UFOs above that will very likely help for price to just keep bouncing up and down within that range. And so far, we are good. Of course, I'm sure you will notice that the upper line is getting dangerously close to the upper solid line. And we'll meet again tomorrow, isn't it? So when we meet tomorrow, very nice to see you, Vinay. A pleasure to have you. And when we get close to, or when we surpass the upper solid line, then we're going to have to do some maintenance on the trade, and some rolls and tweaks will take place that will take care of tomorrow, if that's the case, unless the market falls, and then everything becomes calmer for the trade. Okay, so nothing to be done on Goldman Sachs. Okay, so next one in line, it's going to be PayPal. But before I talk about it, I also want to give you the opportunity to phrase your questions in case you have any questions. So feel free to do so. I will also, before I talk about PayPal and AMD, which are more complex as a trade because they are double calendars and there are different expiration dates and different things going on. So I'll move to Lily as well, which it's a directional trade, so that's very simple to understand. Okay, so I'll talk about this one first. And I don't see anyone typing any questions, so I believe all should be good. If you don't mind, I'll take a sip of water, guys. Sorry for that, guys. One sip of water had to be two. Anyway, so I see no questions, so I guess everybody's with me. Only those trades were quite simple, so I'm happy to hear and see that you're with me. If we look at Lily, okay, so what's going on with Lily? we got in Lily on that particular date. The stock has been rallying very hard. Then we did some maintenance of the trade. If you recall, With Lily, we are in a position where the worst case will be to make $223, worst case, and the best case will be to make 1,223. So in other words, we cannot lose with this trade. Worst case is to make 223, and now we are just letting the trade to do its thing, okay? Of course, we are in a situation where that market is doing its, corrective moves. So we had a strong impulse at first, then we have some sort of a correction. It seems that we got another impulse, went above the prior high, so it's showing some strength. Correcting again, a green UFO showed up. Again, this is looking good for this move to continue. The climate had just restarted. You may recall last week we were having some potential interruption on the climate. So the climate had just restarted, is 4 out of 8. So again, at least another 4 days, we should keep going higher. So everything is looking good so far. How are you, Lilan, my friend? Good to see you. So everything is going good so far, and therefore there is nothing to comment on Lily. The trade is currently producing a P&L of $480, okay? After adjustments and so on. It's always more accurate when you look at it here, which is 530. Because we locked in the profits from the put spread. That was the initial entry into this trade where we have been legging in various options contracts until building the position we currently have. So this trade actually profits more than what it shows in the account because profits have already been collected. Okay. What else we got? Okay, well, PayPal. Now, and let's take a look at PayPal because PayPal is a challenging one. Okay, PayPal is not a trade that is doing what we expected PayPal to do. And it's not like it's a big problem, but certainly there is work to be done here to help this trade to end up producing the desired outcome. Because if you recall, we took this trade. This is a double calendar where we bought the 260 call, 230 put, and we sold the 260 call, 230 put using different expiration dates. So it's a double calendar, and this trade was supposed to, profit and enjoy that stock, remaining between the solid lines above and below. Probabilities were suggesting that would be the case, but next thing you know, we got this fantastic, amazing move. That stock has moved close to 20% in a month. So it's really impressive to see, and therefore it basically broke all our plan in that sense, right? So initially you would think, oh my God, PayPal is a problem. Well, let's take a look at what we have first, okay? And we understand how bad as a problem it is, in case it is that bad as a problem. So PayPal is currently producing $300 of loss, 312.5 to be precise. Now, of course, if you look at the account, you're going to be like, how can that be possible? If I look at PayPal, it shows a profit of close to $2,000. Yes, and it's true. We currently have about $2,000 of profit in the account, but this is also because that stock, because we have collected in prior trades that we have closed, we have collected and locked in some losses in exchange for more premium. And we are working, we are kind of, let's call it, not sure this is a proper technical term, but you get my point. We're kind of massaging the double calendar to soften the problem and hopefully turn these initial losses that we collected and locked in the account into future profits that will offset the prior losses and end up in a good position. So far, we are showing a net P&L of minus 310, and we know the worst case scenario is to lose 374. Okay, so this is what this trade is capable of doing for us: either lose 374 or make close to 600. This is where we are at with this trade. But pretty confident we're going to end up in a much better position than that, because this trade is using July 16 expiration long options, and we are selling July 2nd expiration short options. Okay, that's what we are doing. And so I was just thinking about multiple things at the same time. And what happens is that from July 2nd to July 16, we still got July 9 in between. So we're gonna sell more premium again, and this together with the fact that if implied volatility was to rise more, right? So now notice how the loss diminishes and the gains can get greater. Okay, so again, we are exposing ourselves to a potential increase of volatility as the earnings date of the stock is approaching, as well as we're gonna collect more premium to diminish the risk and the cost of this trade. Okay, so we are just working on it, and so far everything is good. So let's go for it. What do we have? Well, notice, okay, this is gonna get a bit more advanced, a bit more complex, okay. So you know, for the ones of you that are our regulars, okay, in the sessions, so you've seen that before, so it's not gonna be anything new. For the ones of you that are newer to the sessions, this may get you step a little bit outside your comfort zone, because this is not simply buying a call or buying a put. It's gonna be a bit more complex, okay. So bear with me on that. We learn through repetition, so give me the opportunity to show you and listen carefully. So here we go. We got the July expiration options right here. Okay, those are the ones we are not gonna touch, okay, until that July 16 expiration. So we are riding the move with those two. The one that we have that we are short is the July 2nd 260 call. Okay, this is the one that we rolled last week. Okay, we did that last week. Okay, now. You may wonder, what about the put side? Because if you look at my simulation, here I got the 260 call, but I also have the 230 put that expires on July 2nd. Well, if you remember, I had an order in the system looking to get filled at 10 cents starting on Monday, and I never got filled. The puts, because PayPal kept going higher, okay, the puts never got to at least 10 cents, so I never got filled on this one. So the reality of this trade, to be honest, if I was to readjust this, the reality of this trade would be 0 for that guy, and therefore the 10 cents I added here, okay, actually they are not, and that would be 384. Okay, so this is the reality of the trade. Okay, that's the reality of the trade, because I never got filled on the 230 put. So the risk of the trade then is not 374, it's 378. Okay, it's about the same. Okay, so with all of this, what can we do now? Well, the idea is to look into rolling the 260 call. Why? Because the 260 call is right here, the one we are short, this one here, okay? That 260 call is here, and the stock is currently trading at 291. So if we do nothing, what's gonna happen is that on Friday, or depending on how you look at it, you may think about Saturday, even though technically it's Friday, so you would be assigned 100 shares of stock short, which is not a big deal because you are long a call against the short shares, so it's not a big deal. But at the same time, there may be a better way by rolling this 260 call to another 260 call expiring on July 9. Okay? And by doing that roll, we're gonna collect more premium and lower the cost of the trade even more, avoid the assignment this week, and get into a final position into the next week, as we then travel to July 16, which would be the end of this trade. So let's take a look. What happens if I right click and I analyze a rolling trade for the 260 call from, not sure why it didn't give it to me. Let me see, maybe I did this too quick. 260 call 9 of July, 2 of July, yes. Okay, so I'm not sure why it's not showing. It should be showing here. Do we have 260 calls? Yes, we do. Right here. So I'm not sure. This is interesting. There may be a mini bug. There may be a mini bug or something like that with the last update of Thinkorswim, because it's not showing me what I need. Okay, so I guess I'm gonna have to do it manually. So I have a position here using July 2nd. So what I'm gonna do is I'm gonna right click. No, okay, let's do this. Right click to analyze and buy, and I'm gonna make this a vertical. So I don't understand. Oh, okay, I get it. Okay, it's showing here. Sorry for that, guys. I was lacking real estate space on my screen. I don't know why this changed, but it's here. Okay, so let me go ahead and let me do that again, guys, if you don't mind. Analyze rolling trade. Here we go. And you see, why is he doing this to me? Give me a second. Analyze rolling trade. yeah, normally this would put it on the trade tab, and now it's moving it to the analyze tab. I'm not sure about that. Anyway, so if I buy to cover the 2 of July, okay, the 260 call that expires on July 2nd, I buy to cover that one, and I turn around and I take the 260 call that expires in July 9, okay, that's going to create a credit of 9 cents, which is very little premium. So why is that? I was expecting more. Let me take a look at the option chain to understand what's happening to the July 2nd and the July 9 260 call. So the 260 call on July 2nd has an extrinsic value of 1 with a theta of 2, meaning that those are distorted Greeks because you have 2 days and a half to go. Based on theta, you can make 2.5 times 2, which is 5 cents. But the extrinsic value is, well, now is 9, but now theta is 15. So again, it doesn't add up, right? So those are distorted Greeks. So I would like to roll because Greeks are distorted. There is not much extrinsic value I could profit from the front week. If I go to the next week, extrinsic value is only 17 cents. This is quite disappointing. This is quite disappointing. Let me take a look at what's happening. Yeah, I guess implied volatility with the VIX going down, the implied volatility didn't really rise much, and therefore we only have 16 cents of implied volatility. So if I get 16 cents, but to get those 16 cents, I have to pay 11. So I am left with, let's call it 5 cents. So I'm not, just like the same thing that happened last week on Wednesday, I'm not keen on doing the roll today, even though the Greeks are distorted already. And I see your message, Maka. Thank you so much for confirming it's 10 now. Still, it's not worth it because if we're going to do this for 10 and you have to pay commissions to get in and to get out, really it's going to be just a bit too little, isn't it? So in a case like that, I discussed the prior week that I would prefer to go through assignment actually, and then on Monday do the trade. So I would save plenty of commissions by doing that. And I may get lucky and I get some extra profitability on the stock dropping at the open on Monday. And if the stock rallies, it doesn't matter because I got the call again, so it's offset, it's hedged, okay? So I would be open to do that to get, a bit more premium and pay less of the commissions, okay? But today, definitely, we are not gonna do the roll, so I'm not gonna go deeper into explaining anything about the roll because we are not doing it today. It's too little premium to do the roll for 7 cents, okay? So that's it. So no roll on PayPal. We'll go back to PayPal to review tomorrow. And the put side for PayPal, I'm not gonna even check because if the 260 call is only paying like 15 cents, so the 230 put is going to pay extremely little, and it's very, very unlikely I will get those minimum 10 cents which I'm shooting for. So far we are slightly stuck, if you wish, in a position where the risk is under control. We know the worst case is going to be to lose 378, which that against the other trades we have is fine. But we are a bit stuck in the sense that we cannot keep improving this trade, at least today, even though tomorrow it may be. Okay? So we'll come back tomorrow to check on that. Okay, so what else? AMD. Okay, and this is the last one to review, and then we get in trading mode, looking for new trades. So AMD, what do we have? An amazing move, okay? Just like what we saw on PayPal, also a move that exceeded what we expected, okay? What a fantastic move. I mean, if you measure the move from here to here, right? So from less 280 to 93 or something like that, this is 20.25% in 34 days. It's really unbelievable, okay? Really unbelievable, very, very, very powerful moves. So again, bad news. It's kind of hurting our plan because our plan was expecting the stock to stay in the range. But at the same time, it's not always that bad at all because the fact that it's moving so much also means that we are gaining implied volatility, isn't it? And because we are gaining implied volatility, these trades will pay better because of the sensitivity to Vega. So currently this trade, it's making a net profit of $28 if you add up everything we've done since we entered this trade per contract. Here it shows plus 50, but remember we have closed prior trades. So if you add up the whole thing all together, The net P&L right now is 25.5. Okay, that's what this trade is doing. Here we don't have a put, so you can see here I have it correctly set as 0. Okay, so we can always attempt to get the 70 put in July 9, but let me show you very quickly what's going to happen with the 70 put in July 9. If I show all strikes for AMD, the 70 put is paying you 2 cents, so forget about it. Okay, we are not going to get enough premium given how far and fast the stock has moved. Okay, again, 20% in 34 days. So again, we will keep the put there in the list with the number 0 for quantity because we're not going to get it. But now the question is, just like with PayPal, do we roll the 85 call from July 2nd to July 9, or we don't roll it because the long units are July 16, so we can still roll one more week, okay? And, you know, go from that position where the worst case is to lose $6, okay? We're currently making 23, worst case is to lose 6, or get into a place where we could actually be fully profitable no matter what. So the question is, those 85 calls, okay, how much theta and extrinsic value they have. If we look at the current expiration date, which is July 2nd, so the 85 has an extrinsic value of 14 cents with a theta of 12. So as you can see, those are distorted Greeks. Why? Because we got 2.5 days to go for expiration. So if you do an easy math, 16 cents, 15 cents times 2.5, that is much more than 17 cents, which is the extrinsic value. So the Greeks are distorted because of this option being so deep in the money, and therefore it may be time to roll if we get enough premium. The extrinsic value for the next one is 24 cents with a much lesser theta value, so this is more reasonable. And you know, let's take a look at, you know, how much we would collect for doing the roll. Oh, my friends, you know what? I'm not sure what's happening to me today. You were thinking, Jose, what's happening to you today earlier? I was using the analyze rolling trade menu instead of the create rolling trade option. I don't know, like I've never done this, right? Silly, very silly. But anyway, so notice what's happening with AMD is the same story as PayPal. We get very little. We get very, very little, okay? And it has a lot to do with the VIX going down, etc., etc., etc. So again, we're going to have to monitor this tomorrow. Tomorrow may be a better day. That's exactly what happened last week, isn't it? Tomorrow may be a much better day to do the roll. And if it's not a better day to do the roll, then I'll give you instructions on what to do exactly on Friday so you know what to do, okay, before the weekend and before the options expire. So, done with the review. We have all those trades running in the account. Everything is working according to plan, even though PayPal is showing a little bit of loss. Everything else is in the profit zone. Everything is good. So all is good for us to get back to work and find more trades. Okay. So again, I'll have another sip of water, and I'll give you the opportunity to ask questions if you have any. This is for everyone, guys. Okay. Of course, for you guys in the private room, for sure. But you guys in YouTube, you guys on Facebook, you guys on LinkedIn, just feel free to comment. Say hi, don't be shy. I know sometimes in public spaces, you know, it's kind of normal to be a bit shyer, but really there's no need for that, okay? You know, we are, this is just a trading community, guys. You know, we are traders, okay? We are all the same type of, we all have the same type of genes, right? So so just feel free to interact with us and don't be shy, okay? So questions, if any, and we begin now with trades. Cool. Okay, so let's continue. So we're gonna start with our filters here and the non-directional. So we're gonna start looking at non-directional trades. They're gonna be iron condors. When I show you the some of the parameters of the scanner, I want you to notice I have selected top 50 and implied volatility greater than historic volatility. So in other words, we are looking for options that got decent amount of premium built in, and ideally we can end up selling premium on those stocks, on those options, and end up collecting a nice amount of that premium, making those trades with a good reward to risk ratio. So I'm going to start with Broadcom, I'm sorting these from higher price point to lower price point. So we got Broadcom there. We also have Goldman Sachs. Obviously, I'll skip that one. We have it already. We also have Western Digital right here. We also have Dow, Dow Chemical. So we have multiple companies there. So we're gonna be looking at all the various parameters that we need to explore to either approve or reject the trade. Okay, I'll start with Broadcom. So first, we got the UFOs. Performance stat is 53%. So that is, my friends, acceptable. Why? Because we are always looking for at least 48% for non-directional trades. So that's good. I also want to check with pre and post market data, what do we get? And notice that we get 41.89%, which is not acceptable, and therefore we are going to ignore pre and post market data and focus on regular session only. Remember that some stocks got extremely high quality of trades done in pre and post market, but it's not all stocks. It's a few, but for those few, it's really worth it to be aware of what's going on pre and post market. Okay, so we got 53%. So I'm ready to continue working on the trade. What else do we need to know? The earnings date is September 2nd. Okay, so September 2nd means that, if you look at the calendar, it means that this expiration date happened, not too long ago. So if I enable EPS postings, it was here. So that was on June 4. Okay, so that's when the date happened, and from June you move 3 months later, you go all the way to September. So in other words, we got so many different expiration dates that we can use to do this trade. So that's very nice because it gives you more choices. But again, we also need to make sure those expiration dates are liquid. So we're going to have to work on all those various parameters. Very quick, I want to know where that stock is at. So notice that this peak is the all-time high. Another rule that we have is we need at least 2 UFOs above and below to accept the trade. Guess what? We have 2 red UFOs above and we have multiple green UFOs below. So, we have what we need to accept the trade from the chart point of view. Now let's look at the options to see if the trade will be accepted or not. So I'm going to use July 9, which is the next expiration date, and I'm just going to right click to analyze and sell a random iron condor that later I need to adjust. But right now, the only thing I care about really is to add my 1 standard deviation above and below. So I can plot that on the chart, which is 492 to 456. This is the price range where the stock is likely going to be trading in between from now until July 9. So I'm gonna plot this on the screen, and wow, this is a bit tight, okay, because 492 is all the way up there. So it's good because it's below the next UFO, so it's good, but it's a bit tight, isn't it? And then on the bottom part, we said style dotted. So the bottom part, sorry for that, the bottom part is here. It's 456, 457. So 456, 457, it's something like that. Okay, so in other words, for us to do the trade, it would make sense to think about relying on that UFO and set the upper range to be 495, and relying on this UFO and set the bottom part of the range to be 450. Okay, so that's the range we're gonna be trading. And without doing too much more drawing on the chart, so we don't waste our time, I'm going to be looking at the 495 and see how much we get paid. So it seems that for the 495 we get paid 62 cents. 62 cents, it's more than 35, which is our minimum. And for the 450 we get paid 95 cents, which 95 cents is more than our minimum, which is 35 cents. So it does look like we may end up accepting the trade. So let's take a look. Let's do a little bit more drawing now so everybody understands what we are trying to do. So this is the current date. This is July 9. Let me adjust this perfectly. This is July 9 when the market closes. Here we go. So 4 p.m. So what we're saying is we expect this market to trade in the purple area between the vertical lines and between the horizontal lines. This purple area I'm drawing right now, that's where we expect the stock to stay, because, statistically speaking, is what is supposed to happen, and then the UFOs are there to help those statistics to become a reality and not only a number. Okay, so the trade would be made of buying the 497.5 call and selling the 495 call above. Okay, all of this is using July 9, 2021 expiration date, and on the bottom part we would be selling the 450 put, selling, and we would be buying the 452.5 put below. Okay, so that would be the trade. And again, I was observing the strikes early on, and I did notice that we had strike price increments of $2.50. So again, if I show you above 495, we have 497.5. Below 455, we got 447.5. What did I write? I think I wrote 452. That would be so silly. Yes, oh my God. Definitely something is happening to me today, because that's a pretty silly mistake. But anyway, good. Good. Perfect. Just looking at your notes, guys. So anyway, so let's put this in the simulation tool and see if this is gonna be acceptable or not. So we're gonna have 497.5, 495 on the call side, and we're gonna have 447.5 and 450 on the put side. Okay, that's the trade we get. Okay, that's the trade we get. So if we get this trade, so is this something we want to accept or not? That's the question, right? Well, it's not looking too good. Why? Because the strike price increments are $2.50. Okay, so our raw risk, I thought it was looking better, to be honest. Sorry, I just clicked on Google Chrome. We don't need Google Chrome. So the strike price increments is $2.50. So we have a raw risk of 2.5. We always shoot for 15% of that as a minimum for premium to collect, which is 37.5 is 38 cents. And what do we get? We get 32. So it's not looking like we're gonna get what we need. Okay, we need at least 38. Less than 38, we don't. Okay. Now on the bid side, we got 60. On the ask side, we got 5 cents of credit. So it's a little bit of a widespread, and you know, in a normal case, so I would like to explore what if we do the 16, which is monthly, which is probably more liquid, but the 16 is not gonna work, because if I do the 16, so what's gonna happen is that, and now I got an error here, so I cannot show you. So let me go back to 9, and let me go back to 4. Okay, so this just got crazy. I'm gonna have to re-enter it. So let me do it with a 16, and you will see what I mean first. So if I do 16, analyze and sell an iron condor, right? So what happens is that those probabilities now show 496 for the upper part of the range, where 496 it's above our red UFO, and we don't have UFOs above that because this is all times high. So in other words, we cannot do July 16, which probably will bring in greater liquidity and an easier trade to be accepted, but we cannot do it because of that reason. Okay, so we're gonna have to either pass on the trade or try. Okay, this is something you can do, and actually it would be wise to do. Let me show you why. So 97.5, 95, here we go. So again, we are back here to, you know, it's showing 30 cents now. Again, we need 38 minimum, okay, but it would be wise to do, because right now, you know, and you can see that because of the distance between the dotted line and the UFO, which is much less above than below. So that means that we are fairly centered, but the very, very center of the range is maybe a bit lower. So what would be great to see is, it would be great to see that market to fall a bit deeper. If this market fall a bit deeper, not only now you have a starting point closer to the midpoint of the range, which statistically speaking is ideal, but on top of that, that's gonna scare people away. And as people are scared what's going to happen to those premiums, they're going to have a little bit of an uptick, and now you may get your 38 cents, you may even get 40 cents. Okay, so my proposal to you is to, assuming that you're okay with taking this trade, you know, you have decided if you want to use real money, paper money, large size, small size, all of those are your decisions. But assuming you want to take it, so the way I'm going to do it myself is to shoot for 40 cents. I may not get filled. But if I do get filled, then it's gonna be a nice one. So AVGO, looking at July 9, we're gonna right click to sell an iron condor, and let's readjust this. On the call side, we are doing 397.5 and 395. That's it. On the put side, we are doing 447 and a half and 450. Here we go. So that is, it's showing here like 30 cents. Okay. So what I'm going to do is I'm going to place an order for the day, only a day order at 40 cents. I may get filled, I may not get filled. I'll just give you a few seconds in case you want to take a screenshot, just to make sure you got the strikes right and everything else, and that, and then we'll leave it alone, okay? And then we'll go for another trade. So confirm and send. Send 1, 2, 3. So the order has been sent. So now the order is here, waiting to get filled with AVGO. So we'll see if we get filled or not. Tomorrow we are back together, so we'll discuss that tomorrow. Next trading line. Okay, let's see if we find a trade that can get filled immediately. Okay, that would be great. So WDC, Western Digital, I'm skipping Goldman Sachs because we already have it. Western Digital is showing 44%. Performance stats, that is not acceptable. Pre-market is less, that is not acceptable. Dow is showing 38%, not acceptable. Regular session is showing 50%, it is acceptable. Earnings are happening on 7/22. So 7/22 allow us to use either 9 or 16 of July expiration. Okay, so that's good. Okay, that's good. And we have, that's gonna be difficult. Yeah, let's move to the other stock because it's not gonna work. Why? Because the distance from that UFO to that is so huge that basically I would end up selling the 52 puts and they're gonna pay nothing. Okay, it's too far for a 1 or 2 week expiration date. So I'm gonna go for IP, international paper. So let's see what's gonna happen with this one. Earnings on the 29, probability is looking good. I guess I got a lot of deleting to be done here. So let's do that. Here we go. Okay, so we got 54% probability and 2 UFOs above. We have, with pre and post market, 42%. That's not acceptable, so we're gonna have to work with the regular session data. And out of curiosity, the monthly time frame shows that this is almost all times high. Actually, the all times high were created on that date, which is kind of like January. So let's go for December 17. Okay, so I want to load data starting all the way December 17. Okay, so December, that's a lot of data to be loaded. So December 17, no, actually December 1st, 2017. Okay, so okay, this is gonna download data. So we have the PD there, it's gonna be downloading. Because it's gonna take a while, so I'm gonna leave it there downloading. And I'm gonna go back to other stocks, and I'll come back to IP later on to find out more about that. So Marathon Corporation, enable AutoUFOs. So earnings on August 4. Yep, plenty of data above and below, and I mean looking pretty okay in the sense that we have UFOs above and below 55%. And if we look at pre and post market, we are 42. So pre and post market will not accept, but regular session we will. And I'm gonna have to load more data than this. Okay, so looking at the monthly time frame, I may need to load data starting here, which is August 19. Okay, so August 19. Okay, you know what? I'll load all the way to 2017 as well. That's it, just to save myself some typing. And while this is loading, I'll go back to IP. where the data may have been now fully downloaded. Here we go. So we have the UFOs. You can see we got multiple UFOs above and below. Yeah, so actually we got 3 UFOs above, multiple below. The setup looks great, to be honest. So let's go ahead and explore IP deeper, knowing earnings are July 29, so we can use multiple expiration dates. But let's start analyzing, as always, our July 9. Okay, even though, to be honest, I'm gonna skip it. I'm just gonna go for the next one, just because you can see the next one got much more implied volatility built in. So let's begin, and also liquidity is gonna be better because it's monthly. So let's start there. So analyze and sell Iron Condor. Okay, here we go. Standard deviation 64 to 58. Okay, so 64 to 58 is like this. 64 to 58. Okay, and what do? Well, draw a line here and draw a line there, and that's the best it can be, which is almost perfectly centered. Okay, so 66 is the strike we would like to sell. So let's see, using July 16, how much we get paid for the 66, and it's only paying 8 cents. Oh wow, that's very disappointing. So if we sell the next one, which is July 23, which is still before earnings, 66 pay 10 cents. Okay, very limited premium here. Wow, that's very disappointing. So it was looking very, very good on the chart, but I guess that the drop on implied volatility today on the VIX, it's impacting IP maybe more than other stocks, I would guess, because this is really, really low volatility. So let's look at MPC. We got 5 minutes to go, guys, so hopefully we'll get a trade here. 56% with pre and post market, it becomes 44, so we'll stick to regular session. Okay, so many UFOs above and below. Earnings on August 9. Okay, earnings on August 9. So let's take a look at this one. I'll start with the same July 16. Okay, and add a random Iron Condor just so we get the measurements, which is 64 and 56 something. So 64 somewhere here. Okay, so that, and create a new parallel, and the bottom part was how much? It was 56 something. Okay, good enough. So in other words, if we go for the next UFO, so this one and that one would be where to go, because we got 2 green UFOs and we got 3 red, so it's minimum 2. So 66 and 54. So how much we get paid for the 66? That's the magic question. Probably not enough. 11 cents, not enough. But in this case, I'm not so concerned, because what if I go 1 more week out? So the 66 is paying 29. That's good. I mean, it's not like it's amazing, but it's acceptable. So July 23, now the question is, what is the statistical range for July 23? And the answer is 65 to 56. Okay, so 65 to 56, it's still, 65 is a bit more, it's still within our UFOs. Okay, so it's all good. So let's go ahead and put this trade together and see if we can accept it or not. 3 minutes to go, guys. So we need to do this in 3 minutes. So what if I buy the 67 call and sell the 66 call using July 23, 2021, and on the bottom part we sell the 54 put and we buy the 53 put below. Okay, so what if we do that? That would be our Iron Condor in this particular case. So what would that do to us? Okay, well, let's see. Let's adjust it. 67, 66. That's the call side, and the put side was 54, 53. No 53 and no 54. We got 55 and we got 50. Tricky one. So we're gonna have to do 50-55. And if we do 50-55, this is a totally different story, because we're gonna have to widen the upper part too. So if we do 50-55, I would suggest to do 65-70. And let's see what happens. And this would not be acceptable, guys, because now our raw risk is $5, right? From 50 to 55 or 65 to 70, we got $5. And therefore we want to collect at least 15% of that, which is 75 cents. And this is only paying 46. So there is not enough premium there. What other expiration dates can I use? I could use July 30, isn't it? We said earnings are August 4. So my concern is the statistical range with July 30. Let's check. July 30, it's 65.74 and 55.34. So still good. I thought it would not be good, but it's still good. It's more or less like that. So it's still good. So let's see if that pays more. And most importantly, I would love to have more flexibility. So how many puts I got available there? I need to do 54, 55. I don't have 54, 55. I got 55 and 50 that I got. And on the upper part, I can do 65 and 70. 65 and 70. Do I have 71? Yes, I can do 66 and 71. Let's see what that does. Yeah, that hurts the premium. So it would be better the way I had it with 65.60. But still the premium is 78 cents. And again, the strike price difference is 5. So 5 times 15, we are shooting for 75, but this only pays 68. So it's really the same story that we got with the prior stock. And this is the consequence of the VIX falling. Am I frozen, guys? You guys see me well? I believe all is good on my end. Everything looks correct. So if you guys see me well, please let me know. Let Joe and the chat box know that all is good. So again, it's the same story that we had with the trade with Broadcom, where it's worth it to place an order and see if you get filled. So I want to do that, okay? But we may not get filled, okay? And it's again the consequence of the VIX dropping, which is obviously hurting the quantity of premium to be collected. Okay, so I'm just gonna add AVGO and MPC here, so we can review that tomorrow. We may have got filled or not, and then we'll discuss. But remember, this is trading, patience pay, right? And we better be patient, isn't it? So the trade would be using July 30. This is an Iron Condor. I'll put it on the screen. I'll leave you a moment to take a screenshot because I know I am rushing it given the fact that it's the end of the session already. Thank you for confirming, guys, that all is good. So we're going to be doing 70 and 65 on the call side. And on the put side, we said is 55 and 50. Okay, 55 and 50. That shows, in my case here, 70 cents. Remember, that's not enough. We want at least 75. So I'm going to go for 75 and see if I get it. And we'll talk about this tomorrow. Okay, so I'll just wait a moment in case you want to take a screenshot. Since the session is over, you may not have time unless I pause here. So I'll just wait. And then we will call it the day. So that's it. I guess you got it. So confirm and send. Okay, here we go. Remember, this trade has a risk of $425 per contract. Okay, so just keep that in mind to decide if you want to take it or not. Real money, paper money, one contract or multiple contracts. Per contract is this. So I'm going to click send. And this has been sent. And now we got two trades there waiting to get filled with Broadcom and MPC Marathon. So we'll talk about this tomorrow. isn't it? Cool, everybody. My friends, as always, a real pleasure to joining you guys. A real pleasure to spend some time with you and discuss trading. We love it, isn't it? We are passionate about it. I guess that sometimes my passion gets me to speak a bit fast, maybe a bit too fast, but I guess you are used to it. So yeah, I guess all good. In any case, for the ones of you who are new to the sessions, so again, a pleasure to have you. Feel free to ask questions in future sessions. Don't be shy. Everybody's friendly here, isn't it? It's a community of traders. We are all serious and passionate about this, so there is no reason to not to participate on the chat box and be engaged and be active. Okay, guys. So please do so in all sessions. Okay, so that way it's more fun for me as well to get more of your interaction. You guys take care. I will see you tomorrow, same place, same time. See you then. Bye bye, everybody. Take care, my friends.